Today we are going for problems regarding accounting equations. When we go for accounting equations, we have to see what is the accounting equation. First, accounting equation is equal to assets is equal to liabilities plus capital. Liabilities are nothing but the outside liabilities and capital is nothing but the capital invested by the businessman. Now, taking into account the transactions, whether we can able to prepare the accounting equations for each and every transaction or not, we have to see. First thing is, first transaction, started business, business with cash, rupees 80,000. Now, this is the transaction that was given to you, and one thing you have to keep in mind is that every transaction will have two or more accounts. By analysis, the accountants will come to know that every transaction will have two or more accounts. Okay, here what are the accounts that we come across? First thing is cash account, and second one is capital account. These are the two accounts that we come across. Cash account is a real account and capital account is a specialized personal account. Now we have to see this transaction whether it will satisfy the accounting equations or not. Now, here, according to the equation, cash 80,000 rupees is equal to, we are not having liabilities, that is liabilities is 0 plus capital, that is 80,000 rupees. Now when you take into account the equation, 80,000 is equal to, that is L, we are representing L plus 80,000. So the first transaction, it satisfied the accounting equation. This is the first transaction that we come across. Here, the asset side total, that is LH side to the equal to, it is 80,000, and if you take into account the RH side, okay, it is also 80,000. Now we are going for the second transaction. Second transaction is purchased goods for cash. Purchased goods for cash. Okay, 20,000. 20,000 rupees. Okay, purchased goods for cash, 20,000. Now, when we analyze this transaction, again we will come across two accounts. First one is cash account and second one is goods account. And some people, they'll take that as purchases also. But first of all, we have to go for goods only because we are not taking into account the subsidiary books. When we go for subsidiary books, then we can use the as purchases. Now here we are taking cash account and goods account. These are the two accounts. And here cash account and goods account both are real account. Now how will we show that in accounting equation form? So when you want to go for the second accounting equation, you have to take into account the first of all the first equation, and whatever it may be the changes, whatever it may be the adjustment that we come across, we have to take and we have to adjust, thereby we are going to get the second accounting equation. Now cash is equal to liabilities plus capital, that is 80,000 is equal to liabilities value is 0 plus and capital amount is 80,000. Now when we go for the second equation again, second transaction again, we are going to see the goods are coming and cash is going out worth rupees 20,000. So you have to take into account that 20,000 and you have to deduct that. Minus 20,000 plus we are getting goods, that is goods 20,000 is equal to L plus 80,000, that is cash, capital. Now when we go for this, what is the accounting equation that we come across? The accounting equation is 80 minus 20, 60,000 cash, 60,000 plus goods 20,000 is equal to L, there is no change, L plus 80,000. This is the second equation that we come across. Here, if you take into account the LH side, left hand side, 60 plus 20, 80,000, and if you see the right hand side, it is also 80,000. So this transaction also, it satisfied the accounting equation. Now, coming to the third transaction, sold goods for cash. Sold goods for cash. The amount is, say, 30,000. 30,000 rupees. Now, here also we have to take into account how many accounts that we come across. We will come across two types of accounts, goods account as well as cash account. Both are real accounts. Both are real accounts. Now, when you are going for transaction and when we want to see the accounting equation for third transaction, first of all we have to take into account the second accounting equation. The 60,000 plus 20,000 is equal to L plus 80,000. This is the second accounting equation that we are coming across. What is happening we have to see. Sold goods for cash. That is, we are getting the cash and goods going. Okay. Here you can keep anything. This is cash amount. Cash we are getting coming across 30,000. Now minus 30,000 is equal to, there is no change on the right hand, L plus 80,000. L plus 80,000. Okay, that is effect for capital amount. Now, when you go for the third third equation, one thing we have to observe is, okay, we are having 20,000 rupees worth of goods with us previously, but thing is, we are selling 30,000 rupees worth of goods. So it is evident that we are incurring a loss of 10,000. Okay, we are incurring a loss of 10,000. So here 90,000 cash amount is 90 minus 10,000. This is nothing but loss. Mind it. That's why I am keeping that in within brackets. Is equal to L plus 80,000. This is nothing but the third equation that we come across. Now, if you observe whether it satisfied the equation or not, it satisfied. Here, 90,000 minus 10,000 comes to 80,000 on the LH side, and if you go for the RS side, there also you are having 80,000 rupees. So, the accounting equation was tallied. Now, we are going for the fourth equation. Okay, we are going for the fourth equation, and that fourth equation is nothing but a credit transaction. Purchased goods from X rupees 20,000. This is the third transaction. Here, and we are having a person's name, that is X. X, when we are purchasing here, what is the transaction that we come across? We are purchasing, we are getting goods from X. So, X is nothing but an outside party. So, we have their head liabilities. So, we have to write this equation. 90,000 minus 10,000 is equal to L plus 80,000. This is the third equation that we come across. The third equation that we come across. Now, what are the changes that we are coming across right over here? Okay, purchase goods from X thousand. There is no change for cash, so it is 0. Plus 20,000 is equal to, 20,000 is the liability that we come across because we have to pay to X, plus 80,000. This is nothing but the capital amount. Now what is the fourth equation that we come across? 90,000, that is cash amount, plus, here when you see the symbols, here you are having minus 10,000 and here you are having 20,000. So you have to get, you will get 10,000 rupees is equal to 20,000 plus 80,000. So this is the fourth thing we will come across. And the fourth transaction also, this is the third transaction, this is the fourth transaction, and this fourth transaction also it was completed. So 90,000 plus 10,000 it comes to 1 lakh rupees. 20,000 plus 80,000 it also comes to 1 lakh rupees. So this transaction also accounting information. This is the way that we have to prepare the accounting equations for every transaction. Thereby we can be in a position to whether the recording of the transactions are over or not. Okay. So this is how you will come across. And like this, you can show any number of accounting equations for these transactions. When we come across accounting equations for each and every transaction, and when they tally, both asset side as well as the LS side and RS side, when they tally, we can say that recording of transactions is perfect. So this is the topic day for this class.